Good evening and welcome to this session of the live learning classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. It's nice to be back again discussing the topic. Good evening and welcome to this session of the live learning classes. So we had discussion yesterday, and good evening to all of you who are here. And so I'm not reading out the names for want of time. Everybody is here. I've seen the names and I greet you all well, and thank you. Let me also begin with the usual invocation. Sahana bhavatho, sahanau bhunakto, saha viryam karvavahai, tejasvinavadhitamastu, ma vidvishavahai. Om Shanti, Shanti, Shanti. Wonderful. So before we begin, there is a doubt raised by my friend Mr. Madhav Tiwari, which I will answer first. He says, slide number 7, I think it's 8, whatever. There it says, from a person who at the time of receipt of the amount was a director of the company, etc. His question is, he is making a statement here. That is something Madhav may want to review. How correct is your statement? Because you're again saying, you're asking me about slide 19, where we are talking about, again, I don't know which 19 you're talking about. I think you mean this one. That is 23. I don't know, maybe the numbering is wrong, but I think you refer to this, where it talks about. See, first of all, let's understand one thing, sir. Private limited company, ineligible company, that is public limited company, which does not satisfy this criteria, private limited company can accept only from members. First, understand it. That is restricted to 35% of paid up capital, free reserves, and segregation account. So it is not as if they can accept. Even for this 35%, they have to comply with all these requirements. 73 ka. So this is a totally different thing. Now you are making a very bold statement. I want you to review the statement first of all. It is a wrong statement you have made. That is, director of the company is also a member. Now, where do you get this idea from? Directors need not be a member. I might have mentioned it in another earlier lecture. Again, for the sake of clarity, I am explaining it. Director alag, member alag. It is wrong, Madhav, to say a director is a member. No. A director may be a member. That is different. But as a director, when he is giving it, it is exempted. Please understand. This exemption is available when the loan is given by, the amount is given by a person who, at the time of receipt of the amount, was a director. Now, suppose the director is also a member, it doesn't matter. If he is a director, he is not a member. Please, first of all, I think you're totally confused about the topic. That is the problem. Member is different. He may be a member, but he is a director now. When he is a director, and as a director, he is giving an amount, at the time of that, he is a director, then that amount is exempted. It is not a deposit. It is not a deposit. So here, when you come here, we are talking about people who are not directors only will be covered here. Because if some of these members are also directors, any amount received from them will not be considered as depositing. It will not be counted for this 35%. You have to understand this, Madhav. And also confirm to me that you have understood it. Because your doubt is based on it is based on a misunderstanding of the basic principles of company law. So you have to clearly understand. Director may be a member. Exemption applied where he is a director. It doesn't matter if he is a member or not. Even if he is a member, if he is a director, he gives money, that amount, at the time of giving the amount, he was a director and it should not have come out of borrowings or acceptance of deposits, then it is exempted. It will not be considered itself. Other than that, if they want to accept private company and ineligible company, like private company and public company, which is not eligible, can accept only from members. Other members, again, members who are not directors. Okay, because if they are directors, then it is exempted, ma. How to make you understand this? Any deposit received from a person who at the time of receipt of the amount was a director of the company is exempted. Even though he is a member, it doesn't matter. Are you able to understand, Madhav? Please confirm that you have understood. I'm taking a lot of effort to explain this to you. Okay. Now, other than that, if you want to accept, then you are not an eligible company, then you can accept only from members. And that too only up to 35% of your paid up capital, free reserves and securities. I think I've explained it very clearly. You should not have any more doubt. Kindly confirm that you have understood. Please. Okay. Got it? Deposit is received by employee. That type of question, example 2, please repeat again. What? Deposit is received from, you mean, from employee. From employee. Sir, here is an example, sir. Example 2. I don't know what you mean by example 2. Sir, company may take deposit from the employees. Company, in the normal course of business, a company may take some deposit from an employee. Nothing wrong. Security deposit like that. In the nature of a non-interest bearing security deposit. Such a deposit will not be, such an amount received as security deposit will not be considered as deposit under these rules. Provided the amount of deposit they are collecting from the employee does not exceed his annual salary. Does not exceed his annual salary. Have you understood this? First level, have you understood this? Yes. Now, in this example, what is the problem? Tejas is an employee. Company is collecting a non-interest bearing security deposit. No problem. His annual salary means what? The total amount received by him throughout the year, total annual salary is 1,50,000. Right? So, now, the exemption applies only up to the annual salary. Beyond the annual salary, whatever is the amount, it is not considered, it will be considered as deposit. Okay. So, in this example, up to 1,50,000 exempted. Up to the annual salary, in the nature of non-interest bearing, no problem. But then, beyond that annual salary, whatever they are taking will be treated as a deposit. So, answer to the question, comment whether the following are deposit. The answer is partially will be treated as a deposit over and above the annual salary. What about slide 19, point number 2? Yeah, what about slide 19, point number 2? R gives an unsecured loan. Can you be more specific? Because your slide numbers are slightly wrong. Are you talking about this slide? Are you talking about this slide? What is your specific doubt in this? In slide 19. Don't ask me like that. What about and all? Don't ask me a question like that. What about it? What about it? What about it? What do you want? What is your doubt? Boss, what are you trying to do here? Yeah. Nah, I think you have not understood. Your basic problem is you are thinking that director is automatically member. No, sir. Depositor is a member of the company, ma. See, boss, ineligible company can accept deposits only from members. So the word depositor means a member. Eligible companies can make deposit from any person. So any person who has made a deposit with a public company. These two categories are called depositor. A director, when he gives any amount to the company, at the time of receipt of the amount, if he is a director, then even though he is a member, listen to me, Madhav, listen to me. Even if he is a member of the company, if he is a director and he gives an amount, it is exempted. Boss, you have to understand. Have you understood? And now all companies may accept from him. Adama, that's what I've been telling, Baba. All companies may accept, ma. And now, to accept deposit from member, you have to comply with the rules, ma. But from director, there is nothing. Director is exempted, ma. How are you going to understand this? In that little brain of yours, how is this going to go? Please. Members, you can accept. But for that, you have to comply with all these rules, Baba. Circular, all that. You understand? But from director, it is exempted. Now, if a director is also a member, the fact that he's a member, we are not bothering. He is a director. At the time when he gave the money, he's a director. So straight away the exemption will apply. So it won't come into this category at all. It won't come here at all. Straight away, deposit definition itself is out. It will go away. I think I've explained this too well. So your doubt, if you are still arguing with me rather than stating your doubt. And you are not arguing with me. You are arguing with the law. Not understanding the law, you are arguing with the law. Don't do that. You understand the law, your argument will go. Okay. Try to understand it first rather than argue with somebody. If you continue to think I am wrong, Baba, I am wrong. You are right. But you are not right. Understand first of all. So what is your conclusion? Give me a conclusion. And then I will understand whether you have understood or not. Okay. So, Madhav, if this much time you are taking to understand this, please understand. It's not good. Read it with open mind. You will understand. Don't close your mind that other person is wrong. Open your mind. Then you will be able to understand better. Coming to Matiha Kausar, if taxable, Amma, where is taxation coming into this? This is deposit rules, madam. Taxation, definitely entire 2 lakh is taxable. Abba, Mother Diwari, you got it. Director is not exempted. Any amount received, listen to me. Any amount received from a person who, at the time of deposit of the amount, was a director of the company is exempted. Okay, be accurate. Director is not exempted. Coming to my friend Miss Matiha, why are we talking about that? I am not teaching income tax, madam. I am teaching deposit rules. The question is whether this amount is exempted, whether it's a deposit or not a deposit. Answer is up to 1,50,000, it is not a deposit. Beyond that, 50,000 is a deposit. The entire 2 lakh is taxable in Tejas hands. Yeah. Hey, don't ask me about taxation and all, please. Got it? Anyway, sorry, I'm using a little bit of Tamil, but then it's when you're a little emotional, you do tend to use the language which is most comfortable for you. Okay, Bhavan, hey Bob, like that I should tell. Babre, whatever. When giving deposit from his own. Correct. Suman Goyal makes a very valid point here. He is adding the point. I get, boss, making Madhav Tiwari understand this itself is so difficult. Yeah, you want me to go again? Absolutely. That condition definitely applies, Maha. See, for that exemption to apply, the amount should be received, not be taken as a loan. This condition also applies. If you want this exemption, then this condition is applicable. Okay, automatically applicable. Okay. Now, this coming to the point, since I am a practicing chartered accountant, I am also an expert in taxation. But where does taxation come into this? It is taxable. But again, then you will tell me, sir, this is below the taxable limit. Yama, why you play this game? No, I'm not coming. Okay. I'm not entering that game. But I'm happy that Madiha is thinking from different angles. She's seeing it from the income tax angle. She's seeing it from the deposit angle and all that. One more thing. Why am I? No. What am I talking nonsense? Ma, this entire amount, what do you mean taxable? This amount is being paid by the guy. This amount is being paid by that guy. It is taken by the company. It is a liability for the company. You are also asking, I am also like a fool replying. This 1,50,000 is taxable salary in his hands. The 2 lakh is an amount given by him. It is a liability for the company. For him, it will be shown as amount due in his balance sheet. There is no taxability for the 2 lakh. This 1,50,000 salary is taxable. So, where is the question of taxing 2 lakhs? 50,000 is taxable. No, madam. 1,50,000 is the salary. That is subject to tax. 2 lakh is the amount given by Tejas to the company. It is given by Tejas to the company. How it can be taxable? First of all, it is a liability. It is a liability for the company. Am I correct? Tejas will be creditor. Later on, when Tejas is quitting that company and going, we will throw the money at his face and get out like that. We'll say that's all. So there is no income here at all. Okay, good. I'm happy that you're asking questions like this, but I'm also sad that many of you are not willing or able to look at fundamental principles. You are floating in the top. My humble request, little bit, go little down in principle terms. Instead of being so shallow, go a little deep and understand the principle involved. Then automatically many of these so-called doubts will be cleared. It's only because you're shallow, you're not going depth, you're not understanding. Hey, Tejas is giving money to the company. How there can be taxation of that amount? How that 50,000 and all? This fellow is talking about deposit rules. Why am I confusing with taxation? Of course, you have already said it's my mistake, but my mistake is accepting your mistake and saying it is taxable, it is not taxable. Okay. See, if you want to really become a great chartered accountant, then understand the transaction correctly. Then give your view. Without even understanding the transaction, don't say taxable, not taxable. Because in the exam, whether it is law or accounting or whatever, they'll be expecting you to understand principles and answer based on principles, not based on some mug up and vomit. Now, moving on, I think we stopped here. Yeah, we stopped here. We have finished this. Now, we also saw the exemption available to private companies. Now, security. We already said under these rules, especially this is where rule 6, what is a secured deposit? Where the entire amount is covered by value of security. Entire amount. Suppose we have accepted deposits for 5 crores and we offer an asset worth 5 crores. Entire amount is covered by security. Then secured. Suppose I am accepting 5 crore. I am giving an asset worth 4 crore. It is unsecured. So deposits may be secured or unsecured. But if it is partially secured, it will be treated as unsecured. This is something you might want to keep in mind. Okay. And deposits need not always be secured. Deposits may be secured or unsecured. If they are secured, then the charge should be properly created on the assets. How this charge will be created, we'll be seeing in the next chapter. I'll repeat, what is a charge? Whenever an asset belonging to the company, is offered as a security to a creditor, a charge is said to be created on the asset. That charge has to be registered. That we'll be seeing in the next chapter, registration of charges. Okay. So basically, what is a charge? Whenever an asset belonging to the company is offered, is given as a security for the repayment of a loan to a creditor, then a charge is created on that asset. It's like, see, this watch belongs to me. Now, suppose I want to borrow money from you. All of you are there. See, this works beautifully in a physical class, but I don't know how it will work in an online class. But anyway, I'll give this example. It is, I should have given it for debentures itself. See, what I usually do now, I'll tell this as an example, you will understand. In my physical classes in Chennai or Bengaluru or Coimbatore, wherever I take, when I go there, I will give this example only. See, I will usually go to the class by my two-wheeler or my car, depending, because some of these places are nearby. Sometimes I even walk to the classroom. I want to be fit, so I walk. Whatever it is, I go there and then I tell them, boss, I come to this class. And about 40 students, 30 students will be sitting there. All are enthusiastic, all are interested, all like me. They are not like me. They like me. Okay. So they all like me. So then they also know that I'm a chartered accountant practicing, blah, blah, blah. So, they a little bit trust me also. So what I say, friends, today I come, I not bought my purse. I don't have my purse with me. My motorbike, petrol, there's no petrol in my motorbike. I had to push it here. Now I have to go put petrol and go. I don't have money. Can you lend me money? I'll ask my students, can you lend me money? So immediately some students will be looking, oh, what is this? Fellow is asking for money and all. Then some of them will be very nice students. First 2 rows. Sir, no problem, sir. How much you want? Sir, 500 bucks. Yeah, I just want to put some little petrol and then I'll go home. And after that, I'll put 500 rupees. See, 40 students in the class. No single student can give me 500 rupees. But pooled together, they can give. Are you able to understand? Each one person will get 10 rupees, another 20, another 50 rupees. one more 100, like that, collect. Then they'll all put all the money in one kerchief and bring it to me. Are you able to understand what's happening here? They are all depositors. They are all depositors. Are you able to understand? Or debenture holder, call them what you are. Now what I will do, I will take a paper on my notebook and start writing I owe you, I owe you, I owe you. That is called, I'll then tear that piece of paper. I owe Ramesh, I owe Suresh. I give all the papers to them. Those pieces of paper are the debenture. That pieces of paper is the deposit receipt. Are you able to understand? So each one of you will be holding it. Now, one intelligent student will stand up and say, sir, this amount is secured or unsecured. They'll say, hey, it is, what do you want? No, sir, you're wearing a nice watch. Huh? Please give it to us. Tomorrow class, when you come, you repay the amount, take the watch. Now what I have done? So I remove my watch and physical possession. Being a movable property, I have to give physical possession. It is called a pledge. I have to give physical possession. So I give it to him. So I will be very careful, right? This watch is also very, not only costly, the sentimental value. So I can't just like that give it to all of you. So what they will do, they will select 3 people from amongst the class. 3 people who are very trustworthy according to me and according to them. So that those people become the trustees, debenture trustee or deposit trustee. Got it? So I will give my watch to them. They will represent all the depositors, all the debenture holders, the class. And next day, when I come, they will collect the amount from me, distribute it to the students, return the watch to me. This is called creating of a charge. Are you able to understand? Here I gave the example of a watch. For a large company, it will not be a watch. The company will be me. The class students are the debenture holders or depositors. The 3 people who are selected are called debenture, mortgage on the land, etc. will be created in favor of the debenture trustees on behalf of all the debenture holders. In case I do not repay, these 3 people have the right to sell the watch. Like that, the deposit trustees will sell the watch. Or the debenture trustee will sell the assets and they will distribute the amount to the depositors. This is the role of deposit. Why I'm giving this example to you to help you understand how it works. Okay, so charge is to be created on the assets. And for the purpose of providing security, every company inviting secured deposits shall provide for security by way of charge on its asset as referred to in Schedule 3. So that it should be tangible. For purpose of securing deposits, intangible assets are excluded. You'll have to listen to me. Then you should not ask doubt again. You listen to me now. For the purpose of deposits, securing intangible assets, it does not mean that charge cannot be created on intangible assets. You can. If a bank is willing to lend money on an intangible asset, you can create a charge on an intangible asset. But for the purpose of securing deposits, intangible assets are not allowed. Okay. So if you want to say the deposits are secured, then charge should be created on these assets, on tangible assets. Tangible assets, I already explained to you. For the due repayment of the amount of deposit and interest thereon, for an amount which shall not be less than the amount remaining unsecured by the deposit insurance. See, if the company is paying deposit insurance, in case the company is unable to pay the deposit, to the extent of deposit insurance, an amount will be paid. For example, this will again come as a bit of a shock to some of you, or may not be a shock. Okay, let me ask you a question, then you can tell me. You are depositing money in State Bank of India. Let us say that you have deposited 10,000 rupees in State Bank of India. Is it secured or unsecured? Okay. Your uncle has deposited 10 lakhs in State Bank of India. Is it secured or unsecured? Your uncle has deposited 10 lakhs in State Bank of India. Is it secured or unsecured? Is that amount secured or unsecured? Correct. All of you got the point. It is unsecured. Even the best of banks, it is unsecured. And as rightly pointed out by Suman, I don't know what is the current insurance, 5 lakhs, 1 lakh, whatever. To that amount, if the bank has paid the insurance premium, the Deposit Credit Guarantee Corporation will give money to the depositor. Suppose your uncle has not your uncle, my uncle has deposited. My uncle is now in, I don't know, Pennsylvania or Philadelphia. And I don't think he would have got enough money to deposit 10 lakhs. But let us say that he has deposited 10 lakhs. Then at the end of if the bank goes kaput, it's all insolvent bank, then he will get, according to Suman Goyal, 5 lakhs. Whatever deposit credit, that too he has to claim it from the Deposit Credit Guarantee Corporation. Indian bank will not pay. What Indian bank will do? Put 3 vertical line on his forehead and go. That's all. It is unsecured. Okay. It is bank deposits are unsecured. See, Ninat Desai says 1 lakh. I don't know. I will not deposit money in bank. That much I know. My money is there in mutual funds and shares. I will not deposit in bank. That much I know. For that much interest, why I will? No bank today. See, I am not comfortable about many of the public sector banks. I'm telling you. How long government will bail them out? Okay. And see, instead of putting an FD in HDFC Bank, I am better off buying shares of HDFC Bank, according to me. Okay. 5 lakhs, 1 lakh, whatever balance namam, 3 vertical lines on the forehead will be put by the bank. Okay, whether we like or not. You can blame the government, you can blame the Reserve Bank of India. Finally, amount is gone. Okay. So, whatever it is. Now, the point I'm making is this. Another doubt is asked by a good friend of mine, Avinash Kansar, Bas, for explaining the concept of trustees and creating charge. I combined deposits and debentures, but they are alag. Okay, they are governed by different provisions. Okay, depositors are different, debenture holders are different. You got it? Unsecured debentures will become deposits. Unsecured debentures, because see, exemption for what it is available? Exemption for debentures, what? Think about it. See, bonds or debentures secured by first charge. The entire amount on tangible assets exempted. So, secured debentures, fully secured, then debenture. But if it is not secured, if it is non-convertible and listed on a stock exchange, exempted. But if it is unlisted and unsecured debenture, it will be treated as a deposit. Unlisted, unsecured debenture will be treated as deposit only. Okay. But if it is secured, then Section 72 will apply. So, debentures and deposits are not exactly the same, but similar. Are not exactly the same, but similar. Okay. That is one thing. Thank you, Mr. Parth, for agreeing with me that banks are dangerous and all that. I am not trying to see, actually, what I said now could be treated as, actually, I may be violating the Banking Regulation Act. I am not specifically saying any one bank. I'm saying in general, if you look at bank deposits as an asset class and mutual fund as an asset, blue chip mutual funds as an asset class, I would actually prefer blue chip mutual funds rather than bank deposit for many reasons, both from taxation angle, from inflation protection angle, mitigated risk. Yeah. See, there you are saying it's risk-free. That's why I'm saying that is also unsecured for me. And it's only as good as the bank. Okay. And the mismanaged public sector bank is a mismanaged public sector bank. In which case, I am relying only on the sovereign guarantee. There is no sovereign guarantee. That's all I'm trying to tell you. Government of India is not going to bail out. Next time, they won't bail out. Okay. So, that is why you have to be very, very careful. Also, private sector banks, which are not huge, big banks, no, don't take a risk. Okay. So I'm saying HDFC Bank, ICAI Bank, they're all, even there, you are better off as a shareholder than as a deposit. Okay. So now moving on, where the charge is on an asset, okay, other than intangible, then the total amount of such deposits and the interest payable shall not exceed the market value assessed by a registered valuer. So again and again, if you want to say that the deposits are secured, then the entire amount of deposit together with interest should be covered by the value of the market value of the security. Who will decide? It will be done by a gentleman or lady called registered valuer. So registered valuer is a part of the Companies Act in your final syllabus. So these registered valuers will be registered with the ministry, and there's a registered valuer organization, RVO. Our institute, ICAI, is also an RVO, registered valuer organization. So this registered valuer will be certified by them, and then he will be certifying. Okay. So the security not being in the nature of a pledge. That's why I said this is a pledge. For example, only I gave you. The security should not be a pledge. It should be immovable property, which is offered as a security. Okay. That should be created in favor of a trustee for the depositors on specific movable property or specific immovable property wherever situated. Okay. And deposits that are not secured shall be referred to as unsecured deposits in all circulars and communications. That's why the DPT1 very clearly should mention, that circular should very clearly mention deposit shall be unsecured and shall rank pari passu with other creditors. So in case of winding up, the deposit holders will become unsecured creditor. They have to stand in the queue. Wait, if I sell the asset, something is there, I'll give to each one of you. If nothing is there, I'm sorry to say that again and again, I will take that Namagati and I'll put 3 vertical lines on your forehead. Go. That's all. Okay. When we come to registration of charges, I will tell you more about this. In more detail, I will tell you. Chalo. Now, one of the important duties of a company is repayment of deposit. In fact, in those days, when I used to teach the same topic under the old law, 5088, I used to divide my lecture into 5 parts. First part was definition of deposit. We saw that. Very important. Definition of deposit, especially directors, debentures, then employee. These are all very, very important. Share application money. These are all very, very important. Out of that topic, these are very, very important. Then I used to talk about pre-acceptance formality. One of the important pre-acceptance formality is circular. Before accepting the deposit, you have to issue the circular. Later on, from public, you will see advertisement. So the life of the advertisement or circular also is very important. There is a very important pre-acceptance formality. Then I used to talk about conditions for acceptance. Like you have to deposit a certain amount. You saw for debentures, na? In the same way for deposits also, you have to deposit before the 30th of April a certain percentage of the deposits maturing during the year. This is conditions for acceptance. Also rate of interest, premature closing, all that will be covered in conditions for acceptance. Then 2, 3, fourth topic is post-acceptance formality. After accepting the deposit, what you should do? There I used to say, and the fifth topic was consequence of non-repayment. If the company does not repay, what is the remedy available to the depositor? So like this, I used to teach the topic. Now I am not able to teach it that way because MCA has made the whole thing a mess. It's not so neatly coming. So if I do that now, you will then get confused. Already you are confused. So you will get more confused if I do that. So I am not doing that. In fact, the other day somebody was saying, 73 2D, what happened and all like that. So now repayment of deposit is one of the important, conditions which have to be fulfilled by the company. Okay, and in case the company does not repay, this is a problem. This would be the last topic I will cover, but here I have to cover it here. This, in case the company does not repay, then under 73.4, see, remember, 73 deals only with members. So this is applicable. Similar provision will be there for 76 also. In case the company fails to repay the deposit or part thereof or interest, depositor may apply to the tribunal for an order directing the company to pay the sum due or for any loss or damage incurred by him as a result of such non-payment, and such other orders as the tribunal may deem fit. So you can make an application to the tribunal and tribunal will pass order. They will direct the company to repay. If so, they have to repay. Okay, so that remedy, in case the company does not repay, the depositor should go to the tribunal for an order directing the company to pay the sum along with interest, right? Then you should maintain a register, either online or physical, wherein you should clearly mention name, address, and PAN of the depositor, particulars in case of guardian, in case of minor, nominee, deposit receipt number, date and amount, duration of the deposit, rate of interest, all that standard now. If you are accepting a deposit, all this is needed now. Due date for payment of interest, is it going to be monthly, quarterly, or whatever, or is it cumulative and paid finally, whatever. mandate and instructions for payment of interest for non-deduction, etc. Date or dates on which the payment of interest shall be made. Okay. See, one more thing I'll tell you. Having said that, in those days, company deposits were a very, very important method of holding retirement funds. Many companies used, many individuals retired, they used to deposit in company deposits, where companies will collect it and all that. So, it's what I'm telling us. See, you could deposit it. These companies now, which are accepting deposits, now what we are seeing, 73 with 76 and all, they are called NBNFC. NBNFC, non-banking, non-finance companies. Non-banking, non-finance companies. These are basically companies that are not engaged in finance business or banking. They are engaged in manufacturing or trading or whatever. They are using this money for short-term working capital needs. NBNFCs. So they collect. In those days, many manufacturing companies used to collect deposits. It's a very good source of short-term funding. So there used to be a separate deposit section. In addition to that, NBFCs also will accept deposits. Non-banking finance company, like Sundaram Finance, like that. Okay, finance companies. Then you have housing finance companies. Deposits accepted by NBFCs and housing finance company, bank, governed by the Banking Regulation Act, not by the Companies Act. So that's, you're not coming here. But deposits accepted by the non-banking, non-finance companies under this rules. Now, we already saw eligible companies. Now, eligible, we already seen this. That's why I'm not wasting your time. Eligible companies can accept from any person, both deposits from members as well as from any person. So they can accept from the public, any person, in addition to their members. We already saw the chart. Up to 10% from members, 25% from public. Public means anybody, anybody on the road can accept. They can accept. So for that, what is the condition? Just like, for members, you issued a circular. You issued a circular. Here, for from 1 second. From I'm sorry. Yeah. Depositors, if you want to collect other than members, then you have to issue an advertisement. That advertisement will be in the form DPT1. Same form. It's called DPT1. It's a standard form. It will ask you to give all sorts of uncomfortable information, like what is your profit for the last 3 years, how much assets you have, what are the liabilities, etc., etc. So all this information you have to give, including abridged balance sheet for 3 years you have to give, abridged P&L account 3 years you have to give. So people can see what you are. If this condition is not there, every fraud company will issue all sorts of advertisement. Give your money, forget it, relax. Give your money to us and forget it. Like that, no, literally you will forget it because you won't get it back. So this means the depositor, before he deposits money with you, will be able to see that form DPT1. Friends, if you are little smart, you will understand that this DPT1 is not the same, but it is similar to prospectus. Am I correct? One more thing. Once that form DPT1 is uploaded in the filed with the registrar, that is uploaded in the registrar's website, MCAI website, what happens to it? It becomes a what? Once this DPT1 is uploaded in the website of the company and also filed with the registrar, see, a copy of the advertisement duly signed by the majority of the directors shall be delivered for registration to the registrar not less than 30 days before publication, similar to your circular. Okay. So once I do this, once it is registered, what happens to it? Anybody? What happens to it? Once this document DPT1 is registered, what happens to it? Exactly. In Inandesai, absolutely correct. It becomes a public document, which means constructive notice will apply. Tomorrow, a depositor cannot come and say, hey, I didn't see all that, yeah. You didn't show it to me. I did not show it to you. I uploaded it to the registrar. Now, you go and see. If you want to deposit money in my company, but generally what companies will do, They will also keep it on there. You can do. See, before investing, you have to see it. If you don't see it, you can't come and tell that company you didn't tell me. Because he has told it. Public, constructive notice. You are a third party. Before dealing with me, you should see all my uploaded data. So it acts as constructive. Yes. Right. Correct. It becomes public document. And because it becomes a public document, principle of constructive notice will apply to it. Right. And not only that, we are also uploading it in the website of the company. Okay. So many times, I used to address these large companies. I'm talking about really large corporations, companies, big entities like Ashok Leyland and all, where one point in time about 30, 40 people will retire. So over a period of 2 to 3 years, in the following, about 30 people. So the HR people will collect all of them together and call me for a one-day, half-day workshop. They'll call me asking me to give them some suggestions on how to invest their retirement fund, etc. It will be a 2-day workshop. Another colleague of mine will take emotional intelligence. Another one yoga master will come and teach yoga. So in that team, I was also there. So my job is to teach them about how to invest their money, which is the method and all that. So at that time, I'll give a lot of asset classes. One of which I will say corporate deposits. So immediately, Srikanth, how to trust? Because remember, these guys are not chartered accountants. They are engineers, HR guys, non-finance guys. So they don't know all that. So how to do, Mr. Srikanth, what to do? How do I trust that? You're right, you are doubt. So I tell them, boss, go to the website, download the DPT one. In those days, it was not a DPT one. It was called an advertisement. It was available. Take the advertisement and look at the abridged balance sheet. That's all. I said, don't do anything. Take the total liability of the company. Take the total outside liability of the company. Take the assets of the company, including investments and all that. Investments, fixed assets, totally. Balance sheet value. Minimum, the asset coverage, minimum it should be 3 times. That is the asset value, total asset value divided by the fixed, the outside loans, other than sundry creditors, because sundry creditors will be covered by sundry debtors. So that is current ratio is 1 or above 1, you are safe because this is covered. Ideally, current ratio 1.3, you are okay. But the non-current assets, including investments, non-current investments, total divided by outside non-current borrowings, that ratio should be 3. Minimum 3. If it is not, then the logic is simple. If all these assets are sold, you pay off all the liabilities, still two times left over for the shareholders. So it's a good viable company, and that too balance sheet value, not so I say you put that company to this test. If that company passes the test, you are safe. But if the company does not pass the test, don't invest in that company. It's a simple non-finance guy. I used to give them a thumb rule on something like that. So I'm just giving this example to you to say how, if the public wants, they can actually use the information. It is not as if this information is not usable. It is not a waste. You can use it, is the point. Okay. Let me see. Some questions have come. Let us see. Banks have taken insurance. Yes, sir. Absolutely with you. What is the order of payment when a company makes default in repayment of deposit? Order of what payment? Pari pasu. Proportionate. Everybody will get. Suppose the company is insolvent and nothing is realized. Boss, depositor will stand in the queue. Everybody will stand in the queue. Then divide. Then proportionately everybody will get 5 rupees, 10 rupees, they'll get go. Okay. There's no order. It's pari pasu. Everybody will get equal. I mean, equal proportion, in equal step. Okay. So that is how it will be done. What is the main difference between debenture and deposit? Main difference between debenture and deposit. Okay, again I'm saying now, secured means debenture. Again, I'm unable to. I think at the time of issuing it, the company should go for it. One more thing I'll tell you. Actually, I'm given the new law, I'm not able to really say exactly how is it different, except that when the company advertises it, it will be advertising that as a debenture, which means that will be bound by the rules applicable to debentures under 72. It will be called a debenture. Whereas when they are inviting deposits, they will comply with 73 and 76. And so that's how you'll be able to distinguish. And suppose it is a debenture and it is secured, it is a debenture. Suppose they call it a debenture, but it is not secured. Or if it is non-convertible, but if it is convertible or it is listed, not listed on a stock exchange, not secured, then it will be treated as a deposit. So, where did you get this concept? Depositor compulsorily register his name. No, sir, this is not depositor. This is the company should maintain a register in which it should enter the name of the depositor. Depositor need not register his name anywhere. The company will take an application form from him, which will have KYC. Some KYC, you will get Aadhaar, PAN and all that. That's all. Other than that, nothing. Who gets the first preference of getting back the deposit? Sir, there is no first preference. Everybody will get in equal proportion. That's my answer. If you don't understand, I'm sorry. If there are 100 depositors, totally, see, let us say that 5 lakhs is due to all the depositors. All creditors paid. See, the problem is the depositors themselves won't be treated as a separate game. You will take the entire unsecured creditor group. Let us say there are 100 unsecured creditors. Totally, that including depositors, 25 lakhs is due. You are realizing 5 lakhs. So including depositors, 25 lakhs is due to depositors and unsecured creditors. You are selling all the assets other than secured assets. You are realizing 5 lakhs. Now that 5 lakhs should be distributed to this 25 lakhs. How? 5 by 25. So every fellow will get only 1 by 5. Are you able to understand? 1/5 you will get. Suppose one depositor has got a deposit of 20,000. Then divide by 5. What do you get? 30 divided by 5. 4,000. Whatever. That much only he will give. That's all. Okay. So that is what will happen, Mata. I have explained to you the reality of it. Who gets the first preference? Nobody gets first preference, second preference. All of them stand in the queue. Whatever is left, I will give you each one in proportion. I'll give you, come, take, go. How many ever times you ask me, Mr. Srinivasan, this is the answer I will give. Okay. DPT, there is no full form. It is an abbreviation. DPT is basically deposit. See, you notice now, whenever they give these form numbers, now they take some alphabets from the name of the chapter. So here the chapter ka naam is acceptance of deposits now. So they are giving DPT like that. See how they got DPT, you have to go and ask the Ministry of Corporate Affairs. How? I'm sure in Delhi fellows that had a couple of large rums, and then they decided, hey, chalo yaar, naam DPT yaar, like that. Other than that, there is no logic of why they gave these names or not. Seriously. So just in their own funny way, they decided, come on, yaar, we are having a new law. Let's screw these fellows up. Let's call it DPT1, man. Chalo yaar. Okay, call it DPT1. That's all. I don't think they had any real logic behind giving these form numbers and all that. Except that there is a link between the what shall I say, chapter number and the form. So for example, share capital and debenture, SCD, prospectus and acceptance of allotment of securities, PAS, like that. So here DPT again, the chapter ka naam is acceptance of deposits by company. So it should be ADC, something like that. No, they are calling it DPT. Okay, DPT basically is the consonants in deposit. See, D, P, T. Then why is this not there? You don't ask. It is not there. Okay. Seriously, I don't know. What is the meaning of vernacular? Gurpreet Singh. Punjabi is your vernacular. The language spoken you are from the eastern region. Sorry. Then I don't know. Bengali is your vernacular. I don't know where you are from. Whichever state you come from, the local language which is spoken in that state is called vernacular. And I took your name and I got it wrong. So if you are whichever state you are, the local language is spoken in that state, that is called vernacular. For example, in my home state of Tamil Nadu, the vernacular is Tamil. In Andhra Pradesh, it is Telugu. In Telangana, it is Telugu. Kerala, Malayalam. Karnataka, Kannada. Okay. Though, to my knowledge, there are easily 5 languages in Karnataka. Minimum 5 languages in Karnataka. With not counting the dialects. Pure languages like I got Kurgi, Tulu, Okay, so many are there. So you got all of them are there. So Maharashtra, Marathi. So these are called vernacular. Why they want in vernacular? I already explained to you now. There may be fellows like me who cannot understand English and also Hindi. For us, what we will do? Only my language I know. For me, what can you do? If you put in English also, I won't understand. If you put in Hindi also, I won't understand. I know only Telugu. I know only Tamil. I know only Kannada. For me, vernacular. Okay. Yeah, see, Ramja says in Darbhanga it is Maithili. He's a great fan of his own language, Maithili, like that, vernacular. Maithili is also one of the languages. I don't know. Maharashtra, Marathi, correct. I know you are a Punjabi, Gurpreet. You can't be Gurpreet and not a Punjabi. You are a Punjabi, but you are a Punjabi living in Guwahati. So Assamese. Assamese. I don't know in Nagaland what they will do because to my knowledge there are about 25 tribes in Nagaland. And I I have been right up to a place called Mokokchung in Nagaland, Mokokchung, which is very near the Burmese border. Woka district, you have to go beyond. From Kohima, we have to go all the way. In the interior, Woka, a beautiful place. I've been there. They speak so many dialects of Naga. The Naga, so many languages. And they also speak a language called Nagamis, which is sort of a version of Assamese, which is combined with their language and sort of so many languages, so much variety in our country. Why are we spoiling it by putting one language? Let's speak in many languages. And let's wait for Sundar Pichai to give us translators so that all of us can plug it into our ear and speak. And when I speak in English or Tamil, you will understand in Gujarati. Until that heaven of freedom, my father let my country awake. Like Rabindranath Tagore. Rabindranath Tagore says beautifully, where the clear stream of reason is not lost its way in the dreary desert of dead habit. Okay, it's a beautiful Gitanjali verse where he says, let's into that heaven of freedom, my father, which something like that. Yeah. Thanks for. I'm able to see each language is coming out there. Wow. Jai Kannada Mata, Harish Babu, Punjabi, wow, Maithili, wow, Marathi, great. Yeah. Important by heart points I've been telling again and again and again. You are not listening, madam. I've highlighted in blue also. Okay. And when I'm telling you are not listening, at the time when it comes, I will tell you note it. No, the entire definition of deposit by heart it. Entire definition of deposit by heart it. Please. This one you by heart it. This one you by heart it. The conditions for eligible companies by heart it. Okay. This validity period of advertisement is very important. That is, the advertisement shall be valid until the expiry of 6 months from the financial year closure or date of AGM or date on which AGM ought to have been held. See, let me put it this way. I want to accept deposits from the public under 76 from the public. Now, so I want to issue an advertisement. So what I should do? First, I should hold a board meeting. At that board meeting, that format of the advertisement should be signed by a majority of the directors. So if I have 5 directors, 3 should sign. Then I should deliver it to the registrar for registration. Then I should upload in the website, give an ad and all. Before giving the ad, I should deliver it for registration. Then within 30 days, I have to release it for publication within 30 days. If I don't do that, again, I have to get that registered and then I have to. So 30 days. So once I release the advertisement, it is valid. Based on that one advertisement, I can accept deposit. See, once I give one statutory advertisement, please note this DPT1 advertisement is statutory. Statutory means prescribed by law and be compulsory under law. Once I release one advertisement in the newspaper, website and all, then I can keep accepting deposits. Thereafter, I can give n number of other advertisements like easy chair. You can sit freely, give all your money and forget it. That type of advertisements you can give, provided one statutory advertisement has been given. This one statutory advertisement will be valid for how long? Until the expiry of 6 months from the financial year closure. So let us say that I released an advertisement in July 23, I released an advertisement. How long is it valid? How long is it valid? July. So end of the financial closure means 31st March 2024, then 6 months until the expiry of 6 months from the financial year closure. So 31st March 2023, then April, March, April, June, May, June, July, August, September. So 30th September, 6 months. Or suppose your annual general meeting, later on when you come to management and administration, we will see how to fix the date of annual general meeting. We'll see 15 months and all, whatever it is, date of AGM. Suppose you hold your AGM on the 15th of September, then even though 30th is 6 months, 15th. So either the expiry of 6 months or date of AGM or date on which AGM ought to have been held. That date on which AGM ought to have been held means date on which you should have had the AGM. Usually it will be 30th September only, but suppose 15 months and all, some conditions are there, then they see first AGM and all is there. We'll see that when you come to management and administration. In that case, date on which the AGM ought to have been held. These 3 dates you take. Okay, whichever is earlier you have to take. Whichever is earlier you have to take. 6 months, AGM, actual AGM date, or AGM on which it should have been held. By and large, you can go up to 30th September. In case you're holding your AGM before 30th September in August or 10th of September, then before that. So before the original advertisement, the old advertisement is expiring, you have to release a fresh advertisement. A fresh advertisement shall be issued in each year before this old advertisement is expiring. So be very, very careful, because if you do ensure that you release a new advertisement, fresh advertisement before the old advertisement is. Now, one more thing, 73 and 74 means the provisions of 73 and 74 will apply to eligible companies. Means many provisions are common. So they are mentioned in 73, but they will automatically apply to 76 also, to eligible companies also. Mutatis mutandis means with such changes as may be applicable. Yeah, Ramja, we are now talking about acceptance of deposit from public. So here it is called advertisement. Same thing, the same provision. When you are accepting deposits from members under 73, same provision, you simply here, instead of this, you can use circular. Just in this paragraph, you remove advertisement and you put circular. Same thing will apply for acceptance of deposits from members under 73. Just you remove advertisement and put circular. Then the same rule will apply for acceptance of deposits from members by ineligible companies. Okay. So, yeah. So maybe you are seeing the institute material for 73. So what I'm giving is for 76. 73 also similar provision is there, which you are seeing, which will say circular only. So for members, it is called circular. So here we are issuing circular, na? Here we are issuing circular, na? This circular also will be valid for the same period. This circular also has a validity period. That validity period also same. That circular will be valid until the expiry of 6 months from the financial year closure, or date of AGM, or date on which the AGM ought to have been held. And a fresh advertisement, fresh circular will be issued in financial year before the expiry of the earlier circular. Okay. Hi, that's a good question, Ninanji. Is it necessary to issue advertisement before AGM? Even if you don't want to accept deposit during, then you should be very clear. You should not renew any deposits. If you are going to renew a deposit also, you have to issue. You should not. That means what? From you have decided, as and when the deposit becomes matured, I will pay the money and chase that fellow away. If so, yes. But if you renew even one deposit, you are out, because without a valid advertisement, you cannot renew deposit also. So my suggestion, if you decided to reduce the deposits, don't take a risk. Till the last deposit is repaid, you release one advertisement and keep it. Because for some reason, you might want to renew for one guy at least for 6 months. Some people will come and beg. They will say, please renew it, give me interest. So to oblige him, at least you keep the advertisement valid. Once you repaid all the deposits, thereafter, go naked. Who's going to catch you? No need for advertisement. If you don't want to accept it, there's no need to answer your question. But to be safe, if you're having deposits alive, till that last deposit is repaid, keep an advertisement alive because it should be there. This is my. See, you might ask me, Mr. Srikanth, where does it say in the institute material? It will not say in the institute material. Yeah. This is coming from experience of a man who's seen people in trouble for 35 years. I've seen. So whenever I see ICAI, don't do that. It's not based on any book or law. It is my suggestion to you. Because one thing is sure, if you want to accept new deposits or renew an existing deposit, there should be a valid advertisement. Got it? That is why. Good. Now, now we are talking about acceptance of deposits from public. So, if you are an eligible company, you shall be required to obtain a rating from a recognized credit rating agency. Okay, so there are many credit rating agencies. I'm sure you heard of them. ICRA is there, ICRA. I don't know the expansion. Devami, I don't know the expansion. Okay, ICRA, CRISIL, I don't know the expansion. Look it up on Google and don't tell me also. You look it up for yourself. I don't know. They're all very famous rating agencies. ICRA, CRISIL, CARE. Okay, all this, if I'm appearing for IAS exam, I will study. What is that? The abbreviation. So these all come in the IAS exam, government exams, no public sector company, you want to get a job, probationary officer, you have to know all these things. I am 58-year-old Buddha, why should I know? ICRA, CRISIL, CARE. These are all rating agency. They give ratings like AAA plus, AAA like that. So AAA plus means safe, good. Minus, D minus, B minus, and all. Not good. Actually, B minus is not bad, but definitely. For example, once upon a time, I don't know whether it's still there, but once upon a time, a government, public sector, public financial institution called IFCI, Industrial Finance Credit Corp, IFCI, I forget the expansion. They were Industrial Financial Corporation of India, I think, something like that. So that IFCI is a very good institution, but due to certain reasons, their rating was B minus. So they could not go for public issue of debentures, or they could not accept deposits from the public. So they went for private placement of debentures. The IFCI, B minus. But see, it is still not a bad, but B minus. So ideal would be AAA plus, like that. So. Is it necessary to issue advertisement before AGM? I've already answered. The given rating indicates safety. The rating shall be obtained for every year during the tenure of deposit. So rating should be valid. You should go. That's a very costly affair. Believe me. So I'll tell you one thing. You might think deposits are a good method of financing. It may be so, but there are additional costs involved. You have to maintain a deposit section. You have to give depositor, relationship manager. All that sort of thing you should have. So sometimes when you take the collective cost of deposits, it may be better to repay all the deposits and borrow from a bank or a financial institution, because only one shot, you go there, give all the documents, finish it, whole thing will take 2 months, approved, you'll submit all the projections and all, get your loan sanctioned, get the sanction again, come back, start using the money, pay him interest every quarter, be happy, give him security. Only benefit is this is not secured. There it is going to be secured. It's better to go there. The interest rate will be lower. You can get better terms. You can bargain. Here you have to be at the mercy of these people. But only one thing, this is unsecured. Which means what? You can collect money without giving any asset as a security. Yeah, Industrial Finance Corporation of India, IFCI. Now, these are common provisions. From now on, whatever provision I'm giving you is a common provision, which means these are common. There is no, shall we say, these are common for both deposits accepted from members as well as deposits accepted from public. Common provisions. So, Deposits repayable on demand shall not be accepted. Deposits repayable on demand. Meaning what? Anytime the depositor can come and ask for the money. You can just walk in and ask. Which type of deposit you can do that? Think and answer. Which type of deposit you can do that? Only a bank deposit. That too, current account and savings bank account. They are called on-demand deposits. Only banks and mutual funds, Nidhi companies, banks and Nidhi companies, only they can accept on-demand. On-demand means, see, for example, you got an account with, let us say, Dubakur Bank Limited. Now, you decide, I don't want to have a relationship with them. That day morning, 10 a.m., you can go to the bank, give a withdrawal slip, close the account, and you can say, please credit this money to my HDFC bank account and get out. You can go out. Nobody can do anything to you. It's an on-demand deposit. They cannot say, if they say I cannot repay, gone. That is why banks have to maintain CRR. Somebody was talking about, when I was talking about capital redemption reserve, somebody was telling cash reserve ratio. This is why banks have to maintain cash reserve ratio, which is the amount they have to maintain 10 to 15% with the Reserve Bank as government security. For what purpose? In case somebody comes and asks, they cannot say, I don't have money. Straight away, they will take this money and pay it. At least the demand should be met. Otherwise, there will be a rush on the bank. Okay. Once I think ICICI Bank had a rush because one or two ATMs were not funded. And suddenly people started getting panic. And they said, ICICI ATM, no money. Then they went to the bank and started taking the money out. The best method for the bank at that time is coolly give the money. Because you cannot fight it by saying, I won't pay. The more you say, I won't pay, the more they'll be afraid. What do you want? Your money? Take, go, throw it at the face. Suddenly they will realize, hey, this fellow is paying. Oh, you have money. That is what I'm telling, man. I'm having the money. You want? Take it like that. Okay. So, that is the only way to give confidence to the depositor. When he wants the money, give it. If you say, I can't give, gone. The trust is lost. Okay. And so this is what it's all about. I don't know, there's a famous old English movie. I think it's A Fine Life or something like that, or it's A Wonderful Life or something like that. Watch that movie where, there'll be a small bank in the US in a small town which the public will support, and he will repay all the deposits, and they will show that the bank is safe like that. So it's a nice movie. I think it's What a Wonderful Life or something like that. Beautiful. So now, on-demand deposits companies cannot accept. Only banks can accept. Other than that, you can accept deposits which are repayable after a certain term. That period, that duration, that time for which deposits can be accepted, the duration cannot be less than 6 months and cannot exceed 36 months. So upper limit 36 months. So this is meant for short-term needs, like working capital, like that. So, but if you have further, even more short-term needs, seasonal. See, during certain season, you may need more money. Then, for the purpose of meeting its short-term requirements, you can accept or renew deposits maturing in less than 6 months. But that the value of that amount of the deposits cannot exceed 10% of the paid-up share capital, free reserves, and securities premium account. So, up to 10% of share capital, free reserves, and securities premium, you can accept less than 6 months. But even that should be not earlier than 3 months. So minimum 3 months you can take, 3 to 6 months. Provided that is only 10% of your share capital, free reserves, and securities. Got it? So 6 months to 36 months, less than 6 months allowed, provided the total does not exceed 10% of SC plus FR plus SP. And that also should not be repayable earlier than 3 months. See, my dear friend, somebody was asking about memorizing and all. All this you can memorize. It's not, don't memorize it. Don't memorize it. Remember it. That's all. Remember it. And just keep it in your mind. Also, you can make, see, I have something called cue cards. I don't know if I have a cue card here. Yeah, I got a cue card. See, this is called a cue card. This is called a cue card. Means this is a small card which is there. So sometimes, when I'm giving a speech or sometimes I write down the points in this cue card. And when I'm actually memorizing something, what I do is I first read it I remember it, repeat it, then I take a cue card and I write it down. And then whenever I carry the cue card with me, I carry about 10 or 15 cue cards with me. Whenever I have a doubt, I'll take it out. Again, I'll see. Like that, I keep on remembering, gets reinforced. This is what I do for remembering stuff. I write it down and then I see it. And I keep, whenever I have a doubt, I keep seeing it. Okay. Of course, today, why do you need cue cards at all? You have Karlo Dunia Mutti Mein, you got your handheld device, a smartphone or whatever, or a tab where you can do the same thing. But see, these are even more. See, I may be going in the car, not driving. They'll be sitting next to the driver. I'll be looking at it and keeping in my pocket. And wherever I'll be waiting for an income tax officer, like that. Saves time. Wherever I go, I carry my stuff and I keep revising it. Since it's in my own handwriting, the chances are keep looking at it. I remember it better. This is a technique I have been using, my dear friends, and it's worked for me. But Himanshu wants to know what is included in free reserves. I already told you. I will tell you once more. Free reserves means reserves that are available for distribution as dividend. Any reserve which is available for distribution as dividend. It does not include revaluation reserve or any reserve created on amalgamation, any notional reserve and all, not covered. It should be available for distribution as dividend, which means by and large you have P&L account, profit and loss account, general reserve, like the dividend equalization reserve. These are all available for distribution as dividend. Capital redemption reserve, not a free reserve. Securities premium, not a free reserve. Is not available for declaration of dividend. One more thing I'll tell you. Since somebody was talking about income tax, let me take a cue from that. Who was asking about income tax? Somebody was asking. Now, linking with income tax, there is exemptions. I think 10 AAA. That is for SEZ, Special Economic Zone. They give you in a batch of 15 years, they give you 5 years where you can take exemption, 100% exemption. So when you're taking that exemption, that SEZ, Special Economic Zone exemption, the amount of exemption claimed by you, as exempted from tax, that amount has to be transferred to an SEZ rehabilitation and reinvestment reserve. Statutory reserve. You have to do it. That reserve should be kept 10 years. Then only it will become normal. So during that period, it is not a free reserve. It is a specific, it is not, they very clearly tell you, this reserve, I think you can't even take it out. It's there locked forever. You cannot, this cannot be, I think, I'm a little vague on that part, but point is that reserve, if it is there in the balance sheet, it is not a free reserve because Income Tax Act very clearly says this cannot be used for declaring dividend. Like that. So there are a lot of items which will come there. You just have to be a little careful about it. So by and large, if you see in the examination, you can feel safe. They won't give you this type of reserve and all, where your knowledge of income tax will be tested. They give you general reserve, capital redemption reserve, you can't take, chod, okay? Whereas general reserve you can take, dividend equalization reserve you can take. Why? Because that reserve is meant for declaring dividend, boss. In case in any year you do not have enough profit, this reserve can be used to declare that. So those cases. So this is what it is. Whenever you offer assets as security, you have to create a charge. How to create a charge, we will see in the next class when I'm talking about registration of charges. Okay. The company cannot create charge on intangible assets like goodwill, trademark, etc. Again, I'm repeating for removal of doubt. Okay. Normally, company can create charge on intangible asset because Madhav Tiwari immediately will jump on me. When I come to registration of charges, I will say, charge can be created on intangible asset. Immediately, he will jump on me, pounce on me, and he'll say, sir, then you told it is not. Listen to me, Madhavji. For purpose of securing deposits, charge cannot be created in intangible assets. But any other loan, an intangible asset like goodwill or trademark can be given as a security other than deposits. Got it? Why I'm telling Madhav, don't get angry with me or upset with me for telling Madhav, but See, I can see your approach. Whenever I say something, sir, you told like that. Now you are telling like this. So now itself, I am putting myself safe. Yes, when I come to registration of charges, I might talk about a charge created on intangible assets. But that's not for deposits. If you are going to say your deposits are secured, then the security offered should be only tangible. That is what this line means. Okay, don't read this line out of context and please waste our time in the next class. So, why? Because, see, intangible assets are dangerous. I'll tell you one thing. Somebody has written State Bank of India there. Now, State Bank of India was a beautiful bank which funded, our, what is that gentleman, United Breweries. What is that? Hey, Malia, Vijay Malia. Vijay Malia's company is there, United Breweries. They have a beautiful brand, Kingfisher. Kingfisher is a brand. Very big brand. Don't underestimate Kingfisher. Of course, the airlines was a flop, but the beer is always still running. It's still a good brand. Okay, that brand was valued at 600 crores. And the State Bank of India and a consortium of banks, they lent 600 crores to Vijay Malia's company, United Breweries, on the security of the trademark. Because you see, that trademark is an asset. It is capable of producing this revenue in the far distant future. Boss, Vijay Malia may die, but Kingfisher beer will not die. It will continue to be selling. Am I correct? And people will continue to drink. Okay, so KF Blue will continue to be there even if my friend Vijay Malia is no longer there, right? So it's not as if intangible assets have no value. But for the purpose of securing deposits, you cannot create a charge on intangible assets. Total value of security should not be less than the amount of deposits accepted and interest payable thereon. I already mentioned this. The market value of the asset shall be assessed by a registered valuer. Security shall be created in favor of a trustee. Okay, we already saw this. Every company accepting deposits shall maintain a register of deposits. We saw. And what is to be entered in the register? We saw. Then the details to be entered. The entry shall be made within 7 days from the date of issue of the receipt, duly authenticated by a director. The said register shall be preserved in good order for a period of not less than 8 years from the financial year in which the latest entry is made in the register. So the period is 8 years from the financial year in which an entry is made in the register. 8 years. So, in fact, 8 years is the magic number. Financial, later on when you come to accounts, accounts also have to be preserved only for 8 years. Except memorandum and articles and incorporation certificate and all the documents filed with the MCA, they have to be permanently preserved. Other than that, everything else you can, after 8 years, you can throw it. Yeah. Now, I already mentioned about depositor, trustee. I gave an example also. Little confusion might have happened for some of you because I spoke about deposits and debentures as if they are the same. Actually, given the nature of these topics now, seriously, there is no legally, I don't see. Because deposits, only one thing is there now. When I'm issuing debentures now, I'll be complying with the 72, which means at one shot I have to issue. That's all. There will be an opening date and a closing date. Within that period, the amount should come. If that subscription is not received, it will not. But deposits, I can keep it open throughout the year. Whenever you want to come and give me deposit, I'll take it. But debenture, you can't keep it open like that. You can't keep the counter open and say, whenever you want, come and give me money, I'll give issue debentures. No. Once you issue debentures, one lot, even if you're issuing a shelf prospectus, once you issue one lot, that should be allotted within a certain date. The closure should be there. If the applications are not received, you have to refund. If 90% of the issue is not received, the same rule will apply to debenture. Okay. The real difference, I'll tell you. Now that somebody was asking, I have also been thinking, what is the difference between deposit and debenture? I'll tell you. Listen to me. Debenture is a security under the security definition. Under the definition of security is, you remember the security guard definition. Debenture is a security. Debenture, what is that? Debenture stock. They are security. Whereas deposits are not securities. Deposit is basically not an instrument. I'm getting a lot of ideas here. Debenture can be traded on a stock exchange. Debenture, the instrument, is a security. It can be traded on a stock exchange. I can buy and sell debenture. Okay, I can transfer. Deposits, no. You cannot transfer deposits. Once you deposit money, I give a receipt. Keep it, take it, keep it in the Lakshmi Puja room, keep it under the Lakshmi statue, and do puja. That's all. When the period is over, come to me. I'll take the paper, direct, give you the money, go. That's all. Whereas debenture, you take the debenture from me, either in electronic form or in physical form, you can sell it. There's a market for debentures. You go there and sell. Anybody, freely transferable. It's a security. The instrument can be transferred. Whereas deposits are not securities. You cannot buy them and sell them. I think this is the basic difference. Somebody was asking me, what is the fundamental difference like that? I hope I have answered that question. Thank you. Okay, somebody was asking that question. This is the answer. Correct. Tunishka was asking, what is the main difference between debenture and deposits? Main difference is this. Debenture is a security, whereas deposits are not securities. Debenture, because it is a security, can be purchased and sold in the market. Bought and sold. Of course, the pricing will depend on the interest rate, bond pricing and all. But deposits cannot be traded. Nothing. It's a piece of paper. Give it to you. Keep it safely. As I told you, keep it in the locker. Or many people have Lakshmi thing. Under the Lakshmi thing, you keep it. Pray. Due date, come. Take the money. Go. That is all. Also, there will be redemption. But pre-redemption, the debenture can be transferred. Whereas, no, depositor cannot be done. Only thing possible is depositor may die, in which case the legal heirs are entitled to the amount of the deposit. That's all. Their name will not be entered as depositors. They come, father is dead, please come. I'm so sorry to hear that. What do you want? Who is the nominee? My sister is the nominee. Then I'll give it to her only. No, we are all legal heirs. Sorry, she is the nominee. She takes it. Then our father died without nominating anybody. Give me legal heirship certificate. I will transfer it to joint account. Or else one now you give me NOC. Like that, some procedure. I give the money back to you with interest up to that date. But I cannot transfer it in your name. No, sorry. Okay. Bonds are basically, both are same. That's what, in the definition of debenture also, they will say, debenture includes bonds. The word bond is it's a security. Bond is also security. Any debt, any instrument evidencing debt, borrowing. When the company borrows money and gives a paper, it is called instrument. That instrument becomes a security. Bonds are also instruments. Bonds are also security. In India, see, all over the world, they use only the bond, name bond, not James Bond. Okay, bond. Whereas in India alone, we don't use the word bond. We call it debenture. Whereas if we go to US or Europe, they call it corporate bonds. Debentures are called corporate bonds. But here in India, rightly or wrongly, we keep calling them debentures. Okay. So no big difference between bond and debenture. Both are debt instruments. Both will have interest coupon rate. Both will have a tenure. Both will be pricing of bonds and pricing of debentures similar. If you know how to price a bond, same rule will be applicable for debenture also. So bonds and debentures, no difference. But deposits and debentures, huge difference. Bonds and deposits, one group, deposit. And the main difference I gave you, which is deposits are not security, whereas debenture is a security. Debenture can be traded, bought and sold in the market. Deposit cannot be traded. This is the main difference. I hope Tunishka is happy with my answer. So she only asked that question. Okay. There is no control on the rate of interest or brokerage, but it should not exceed the maximum rate of interest or brokerage prescribed by RBI. See, to procure deposits, now you have to go to the public and get it now. So just like commission is paid for shares, when you issue shares, you pay brokerage. Now, same way you can pay for brokerage on interest for deposits also. Usually companies pay very small amount. Those days, 0.5%, 1%. In fact, many times the depositor himself will claim it. If you are the depositor, you they will say, sir, here's 1%. I used to do it once upon a time. Some portion of my portfolio was in corporate deposits. Small portion I used to put. So I used to get some percentage, small percentage amount, 100 rupees and all. That the deposit mobilizing broker, he will give it to me straight away. It will be a nice thing. I'll go give check for 10,000 or something. Then I'll go to the counter, give me 100 rupees. Talking about what? 1995, 96, 100 rupees is a big amount. Okay. I could take my family for a movie in 100 rupees. I can go for a movie with my family and, buy popcorn. Today, popcorn I cannot get for 100 bucks. Yeah. Forget. I'm talking about when a ticket was 4 rupees 50 paisa. So myself, my wife, and my daughter, 4 rupees 50 paisa, one ticket, balcony ticket. Then we can have Coca-Cola and popcorn. And I will still have 25 rupees change in my pocket. Okay, when I'm coming out of the cinema theater. Sorry, I'm sounding very, very old, na? My grandfather used to tell that, I used to think, hey, what this guy is saying? Used to say, Srikanth, I used to go to that hotel. We used to live in another area in Chennai and Pushwakam, where I used to go to that hotel where for 10 annas, see, your 25 paisa is 4 annas. Your 25 paisa is 4 annas. Okay, 4 annas. So he said 10 annas, I can have a full meal and come out. Okay, so 50 paisa is 8 annas. Once upon a time, it's 8 annas. So my grandfather will say, 10 annas, everything. He say, I'll have one dosa, one coffee, come 10 annas like that. When he was telling that to me, that the amount was something. So now I am telling, I used to go for a movie at 4 rupees 50 paisa like that. Power of inflation. Debenture, no, don't say debenture issued by government is called bond. Don't say that. The humble request is you try to look at it differently. Don't use the word debenture. Any debt instrument issued by a government is called bond. When government takes a loan and gives a paper as a proof of that loan, such a thing is called bond. It's called government bond. Or another name is government securities, GSECs. Many names are there. Okay. So the point I'm trying to make is, name is a name, but be careful. But let me thank Tunishka for asking that nice question and made me think clearly and give you that main difference between debentures and deposits. Thank you for making me think. Chalo. For a non-banking finance companies and all, they prescribe rate of interest. Same will apply for this also. You can't go beyond that. What that rate is, you can always Google and find out. I'm not aware of it. Just go to Google and find out current rate for interest rate for NBFCs and NBNFCs. It will be there. Maybe 8, maximum 7%, 8%. It can't be more than that. 8% maximum. Can't be given more than that. Once upon a time, they were giving 12%, 13% and all. Now, slowly, the interest rates have come down. Okay. Company shall accept. I'll be giving a small break in another 2 minutes. A company shall accept or renew any deposit only when an application is submitted by the intending depositor. The application shall contain a declaration that to the effect that the deposits are being made out of any money borrowed by him from any other person. So you cannot have an indirect agents where they go and collect and then in their name they deposit. It should be his money. You should give a clear declaration that this amount is own money and not out of any money borrowed by him or from any other person. Okay. You can have deposits in joint names, but maximum 3. Shares also, you can have joint holders, maximum 3. Nomination. Every depositor may nominate any person at any time. If you don't nominate also, no problem. But if you have a nominee, then the nominee will be the person. The nominee shall be the person to whom his deposit shall vest in the event of his death. So in case of death, only nominee will get it. In fact, if there is a nominee, they are not supposed to ask for legal heir certificate now. Even if the nominee is not a legal heir, it doesn't matter. See, some bunkum was being told by one fellow at that time. They were interviewing me for some magazine or something. That idiot was telling, sir, nominee should be a legal heir. I said, nominee need not be a legal heir. Why should I? If I'm nominating somebody, what is the idea? They should get the money. That's all. Why should it be a relative? It need not be a relative. It may be a relative. It need not be a relative. Nominee can be anybody. Okay. In case of death, nominee will get it. The legal heir have to simply watch. That's all. You're able to understand. See, that is the idea. See, the famous N.T. Ramarao Dragon of his life, famous actor N.T. Ramarao. He married one lady, Shiva Parvati. I don't know, third marriage or second marriage, I don't know. Shiva Parvati, one lady. That lady, see, she inherited his assets. See, if that's because his husband is nominating her, what can we do? The other legal hands are there to watch, that's all. Nominee is meant for that. I will nominate her so that she will get it. Why should somebody else get it? That is the purpose of the nominee. Okay. Nominee, sir, here nominee is non-resident. No, no, no. Nominee can be a non-resident, but the rules are very tough. If the nominee is a non-resident, they are no, no. Here, well, I don't understand your question, Madhav. My understanding of English is very poor. Sir, here nominee is non-resident. No, sir. Nominee is you or anybody can be nominee, ma'am. See, my father is putting deposit in company. Who he'll nominate? I don't know. Hopefully me. So if I am nominated or my mother is no more, so I should be the nominee now. So my name will be mentioned. I'm not a non-resident. So nominee is not non-resident. I don't know where you got the concept of non-resident. Nominee means a person who has been nominated, named. So once a nominee, a named person is there, only that person will get the money in the event of death of the depositor. Nominee is not non-resident. No, no, where you get these crazy ideas from, Madhav? But if your question is, can nominee be a non-resident? Can be, but subject to RBI guidelines. Because nominee can inherit it. Okay. But taking it out of India is a different story. Okay. Taking it, because if they are not a citizen of India, and again, you should remember, Madhav, there is a notion of difference between a non-citizen and a non-resident. We saw in one-person company. A person may be not a citizen, but he may be a resident. He may be a citizen, but a non-resident. So citizenship alag hai, residence alag. So if you're talking about non-resident, again the rule will change, whether it's a citizen or not a citizen. It can be any person, even an unknown family member. Who is an unknown family member, ma? Yes, I can have a family member unknown to my wife. You're telling like that. Whatever. Need not be family, boss. It can be anybody, ma. You can nominate me. No problem. I'll send you my KYC details. Nominate me. Okay. I'll take it. That's all. Anybody. Can nominee is non-resident? Sir, it can be, sir. You can, for example, one of my sisters is living in US. She's a non-resident, non-citizen. She's a citizen of US. My father can nominate her. Who can prevent him? But she can come here and in her NRE account, it will be not even NRE. In her NRO account, the amount will be credited. Taking it out, that is a different story. That she has to comply with the RBI guidelines. If she is complying with the RBI guideline, she can take it out. Can be. Nothing prevents. Hello. We already saw creation of reserve. What we will do, I will stop here for a short while and I will give you a break. No, today I'm going to take a break for 5 minutes. See, the weather in Chennai is it's heavy rains. It was raining heavily till yesterday. I entered the city yesterday. As I was driving from the airport, rain stopped. Okay. And no more rain. Today there was not much rain, but the weather is still cold. Feeling a little. So I'm going to have a little cup of tea to moisten my throat. So during that time, we'll have a break for about 5 minutes when you can also relax and come. So the time now is something like 7:35. So let's maximum 7:45. We should be back. Sir, break, sir. Welcome back from your break. Let's see. Can person apart from an individual become a nominee? No. Only individual can be nominee. Company, firm and all cannot be nominee. Okay. To answer your question. What will happen if nominee is not there and the depositor dies? It will go to the legal heirs. See, and again you are saying nominee is not there. What do you mean by that? Nominee is also dead. Because if the nominee is alive, then it will be kept in abeyance. The nominee is also dead. If that's what you mean by not there. Then it will revert to the legal heirs straight away. But if you are using the very vague words called not there, what do you mean by not there? Not physically present? Sorry, you have to wait for the nominee to come and claim. Till such time you cannot give it to the legal heirs. If the proof of death of nominee is given, then it can go to the legal heirs. Okay. In case there is no nominee nominated, where the money? Legal heirs. Normally, if a person dies without nomination, that will go to the amount will go to the legal heirs. Legal heirs is, see, under the succession, law of succession is there in India. So there it will be, it's decided. Parents, first level legal heirs are there. Parents, wife, children. Then second level, third level. If parent not alive, wife not alive, no children, then brother, sister. Like that. No, they are also not alive. Then their children. Like that. Grandchildren. Son is, father is not there. So wife is not, father and mother not there, wife not there, children not there, but their children are there, then they will get. They have no children. Then, like that, there's the rules. There are clear rules out there. Based on those rules, you give it. If the nominee is, there's no nomination. Okay. This is not only for deposits, for everything. Nomination is common for bank deposit, shares, debentures, everything nominee is there. Once a nominee is given, the nominee will work. Okay, nominee is there, nominee. There was a view that if there is a will, and the will mentions this, then the nominee will not get. There may be yes, because when there is a will, and in that will list of assets, this is also mentioned, then the nominee is in trouble because will be more powerful than the nomination. In which case, the nominee should contest that will. When the will is coming up for probate, the nominee should say, I am a nominee. The intention was to give to me only. So that part of the will should not be implemented and I will get the money. That case will drag on and on. Hey, that will be beautiful. For lawyers, it will be a beautiful thing. Nominee will also claim. Legal heir will also claim. Beautiful tamasha. And who will be the ultimate winner? People like my son, means advocates. They will enjoy. It's a field day for advocates. If there is no nominee, then legal heir. Straight away legal heir. That's what I told you. There is no nominee, then legal heir. In OPC, that nominee is different. You, Madhav Tiwari, today you have decided to trouble me. Boss, that nominee is different. Yeah, this nominee is different. Please don't bring that nominee here. There, for the OPC provision, there is we use the word nominee. Please, with folded arms, this man is begging you. Please understand. That nominee is different. In OPC, nominee cannot be non-resident. Yeah, please. Don't do this, Tiwari. Come on. Don't argue with me, ma. If you think I am wrong, I am wrong, ma. Don't argue, ma, please. Don't give argumentative type of comment, ma. You are wasting everybody's time. Okay. Nominee cannot be a non-resident, but here depositor, anyone can be. Yeah, this is different, that is different. वो अलग अलग है. समझिए ना? अलग अलग है. They are different. That nominee is different. This nominee is different. So whatever you have understood, Madhav. Okay. See, you are specializing in confusing yourself. You are taking special care to ensure that you are confused. But don't confuse me. I will not get confused. That nominee different, this nominee different. This is nomination under the deposits rules. That is nomination under the Companies Act, OPC. Okay? The word nominee is used in both, but they have different meanings. Their non-resident cannot be nominee. You are right. Not non-resident. Again, you are wrong. Your non-citizen cannot be nominee, whether resident or not. You are not even understanding the subject, but you are asking question. That is giving me a lot of pain. Their non-citizen cannot be a nominee, whether resident or not. So there the residence is not relevant, only citizenship. Okay. So Madhavji, you are a good person. I love you. I'm sure you are a great human being. But depth. Read more, depth. Then you ask question. Your question will have more meaning. Like many people are asking doubts based on real need to know, not because they're confused. Okay. When a student is confused, now how much ever we give clarity, he won't understand because he is interested only in getting confused. He is pulling here, there. Don't do comparative study. When I'm teaching one topic, be there. Don't go to some other topic, pull out something and bring. It's wasting your time. Of course, a little bit of my time. My time is never wasted. 100 doubts you have, I'll clarify. But you're wasting time now. And yes, it can be done. It is now clear that if nominee is nominated, then depositor dies, it will go to the... Yeah. It is now clear that if nominee is nominated and the depositor dies, it will go to their legal. No, if nominee is nominated, then it will go to the nominee if the depositor dies. If nominee is not there, then it will go to the legal heirs. So it is now clear. What you have cleared is not correct. Now clear. I am now telling clearly where nominee has been nominated, depositor dies, money will go to nominee. Clear? Where nominee has not been nominated, depositor dies, money will go to legal heir. How confusing can you make this? You make it. The choice is yours. Everyone in India can nominate a non-resident. Please locate a good non-resident and nominate it. Boss, 1 billion bloody Indians, you need a non-resident, nominate me. Please nominate me. Okay. Don't search for a non-resident just to nominate. I'm here waiting. Nominate me. I'm an Indian resident. Please nominate me. Okay. Within a period of 21 days from the date of receipt of money, or realization of check or date of renewal, the company is required to furnish a deposit receipt to the depositor or his agent. Within 21 days, you have to give. Okay. Already mentioned about deposit reserve. 20% of the amount of its deposits maturing during the following financial year. Please, for debentures, it is 15. For deposits, it is 20%. There it was 15. Do you remember? I'm just comparing the provision. That's all. Don't immediately ask, sir, debenture is like deposit. No. I'm just saying for debentures, the same amount was, I think, debenture redemption reserve was 10%. And deposit was 15%. Here they are talking about not reserve. Here they are talking about deposit. So they call it a reserve account, but basically what they mean is 20% of the amount of deposits maturing during the following financial year should be deposited in a scheduled bank. Scheduled bank means any bank which name is appearing in the schedule to the Reserve Bank of India Act. RBI Act schedule, all banks are there. Private sector, public sector, everybody is there. And it has to be kept in a separate bank account to be called Deposit Repayment Reserve Account. The Deposit Repayment Reserve Account shall be utilized only for repayment of deposits. Please note the term, name, Deposit Repayment Reserve Account. There it is called Debenture Redemption Reserve Account. That will be used only for repayment of redemption of debentures. Here, Deposit Repayment Reserve. This is a very, very interesting provision, but also little, according to me, not in line with fairness. I don't know why they have this rule, but they got it. See, premature repayment of deposits. Mr. A deposited money with you, with your company, for 3 years now, 36 months. So for 36 months, you are willing to give him 7%. 36 months, you are willing to give him 7%. 7% interest. Just example. Don't catch me out like that. 7%, I'm telling. So 7%. Now that A is coming to you and saying, I want premature, I need urgently, please give me. If he is coming to you after 6 months, but before the actual date of maturity, within 6 months, if he comes, no interest, take it. But if after 6 months he comes, but before the actual date of maturity, the rate of interest payable shall be 1% less than the rate which would be payable for the period for which the deposit has actually run. Meaning, suppose I come to you on 31st of December. I deposited on 1st of January. There's a particular reason why I'm giving this date. On 1st of January, I deposited, or maybe 1st of April, I deposited. I'm coming to you on 31st of December. And I'm asking you for the money. Then you can pay. How much you can pay? 7%. Now you can pay only 6%. The rate of interest will be only 6%. Okay. In two cases, this reduction of interest will not be applicable. Where there is a premature repayment in compliance with limitation on quantum of deposits. See what happens. The RBI might have prescribed some condition on the limit. So if your deposits, accepted deposits above that limit, now you have to reduce it in order to limit. So the Reserve Bank of India or the company's MCA might have told all companies for the next 6 months, you cannot have more than 15%. Some reason, maybe selective credit control order. So anything in excess, you have to refund. So when you're repaying because you cannot keep it, you are making premature repayment for compliance with the limitation on quantum of deposit. There is a limit prescribed by law. You cannot hold it. So you call him and say, give the money back. If so, then you have to pay full interest. No reduction in interest. Also, suppose the person wanting the premature repayment is a member of the National Defense Services. Okay, he is part of the Indian National Army, or not Indian National Army, Indian Army. The Indian National Army is different. Indian Army or Air Force or Navy. But then it should be a war crisis. Don't worry, it will come. So we are seriously into war with some country, and that at that time, when National Defense Service gentleman is coming and saying premature repayment, you can give no reduction in interest. Got it? These are the only two exceptions. Rest of it will be 1% less. Now, I gave an example now. I made the deposit on 1st of April, and I am now coming to you on 31st of December. So I said for that 9-month period, it's more than 6 months before the actual date of maturity, which is 2.5 years later. So you can pay me. I said you have to pay 1% less. But for the purpose of this rule, where the period for which the deposit had run contains any part of a year, then if such part is less than 6 months, it shall be excluded. And if that part is 6 months or more, it shall be reckoned as 1 year. I'm seriously not understanding this. Why this provision is there, I don't know. See, in my it contains part of a year. It's more than 6 months. It shall be reckoned as 1 year. I deposited on 1st April. And I'm asking on 31st December, 9 months only. April, May, June, July, August, September, October, November, December, 9 months. But if I apply this rule, you will have to pay me for 3 months for which the deposit was not with you. That will be absurd. So I will assume that such a foolishness the MCA will not make. So I have to give interest only from 1st April, which means I can give you for 9 months at less. But now comes the real challenge. Suppose I come to you. Okay, I come to you in April. On 30th of April, I come to you. I deposited on 1st of April 2022 or 2023. I'm coming to you on 30th of April 2023 to 30th April 2024. How many months? April to December, 9 months. Plus January, February, March, April, 4 months. Now this whole period contains part of a year, meaning that 4 months. That 4 months is less than 6 months now. It shall be excluded. That's what they are saying. But if such part is 6 months or more, it shall be reckoned as 1 year. Suppose I come to you on 31st of July. Why 31st of July? Suppose I come to you on the 5th of July. 5th of July, right? What will happen? January, February, March, April, May, June, 6 months over. I'm coming to you on the 5th of July. So, part of a year, and that part is 6 months or more, it is more than 6 months, then it shall be reckoned as 1 year. So, they are saying that if I come to you on the 5th of July, you have to give me 1 year interest, full 1 year interest. I don't know. Quantum means amount. Quantum means amount. Okay. Quantum means amount. Amount of deposit. Now, boss, this provision I am only explaining to you. According to me, it is foolish. I don't know why it is there. God, bro, don't ask me why. I don't know. Okay, but it is there. In the exam, if they ask you a question, be very, very clear. Srikanth taught you clearly. Srikanth taught you clearly. If it is less than 6 months, excluded. More than 6 months, it shall be reckoned as 1 year. I given you example also. In the exam, they might ask you a question. In the Institute material, it is there. Okay, I think such a question is there in the Institute material also. So be very, very careful and ensure that you answer it. So 4C. I just checked on. I think there was one question in the exam. It was in the Institute material, it is there. 4. Anyway, so kindly be clear when the question is asked. Be clear. Now, suppose you want to agreed. Maybe if this is how banks are doing it, then good. But even then, I don't understand how it works. I don't understand the logic of how it works. So minimum period not run, then no interest. Agreed. That is okay. I have no problem with that. If it is less than 6 months, then you don't give. But when it is, see, I deposited on 1/4. I am coming to you on for 30th of April. Why am I not getting for that 4 months for which you had my money? Maybe Suman, I'm not intelligent enough. I'm not able to understand why I'm not getting for that 4 months. Why not for the 4 months? Again, I'm coming on 5th of July. Because it's more than 6 months, you make it 1 whole year. Is it just to ensure that I don't come and ask you, or I keep waiting for another 6 months, or I don't know what the goal is. Seriously, just like you are having doubts, I can also have a doubt now. So Suman Goyal is the possibly only person who can clarify my doubt. So kindly tell me, why is it like this? Because since you seem to be a very knowledgeable person, kindly help me. Now, premature, I mean, this part of it, I have taught you, ma. Don't ask me why, how, and all. I am not very comfortable with it. If you think if it is okay, God is great, enjoy. You know the provision now. Okay. Premature renewal of deposit for high interest. That is, the company has raised the rate of interest. The company was earlier offering 7.5%. Now they are offering 9%. So now one person very intelligently what he thinks. No. Already I'm having deposit for 7.5%. Now these buggers are giving me 9%. So let me close my deposit and go for renewal. Premature renewal. Before the expiry, I'll go. And I will renew it at the higher rate. Okay. Now, where any eligible company permits a depositor to renew his deposit before the expiry of the period for which the deposit was accepted by the company for availing of higher rate of interest. The goal here is he will close the deposit. Again, it will be renewed, but with the higher rate of interest. Then the company shall pay interest to such depositor at the higher rate. No problem. Only if such deposit is renewed in accordance with the other provisions of these rules and for a period longer than the unexpired period of the deposit. Meaning, suppose I deposited money with the company for 36 months. Now I want to get higher rate. So at the end of 1 year, I'm coming to you and asking, please renew it for the higher amount. Now I have to renew it for minimum more than 2 years because at the end of 1 year, I'm coming. So remaining 2 years is unexpired period. Now, the renewal period should not be less than that. Minimum, it should be longer than the unexpired period. At least 2 years and 1 month, 2 years and 2 months like that. It cannot be less than, of course, nobody will do it for 2 years and 1 month. So they will say 1 year, 2 year, 3 year. Now you are coming to me. You renew it. You are renewing it for 2 years. Sorry, no. It should be more than the unexpired portion. So remain another 3 years, you renew it like that. So they have to renew it for 3 years. So the renewal period should be longer than the unexpired period of the deposit. Then you can pay the higher rate of interest. Yeah. Seriously, sir, one thing, Mr. Rahul Goyal, 6 months, less than 6 months seems wrong. I think this pertains to ROI. You big words and all you are using. ROI. I'm not able to understand. Return on investment. But not to calculation of interest. I don't know. This is the rule, boss. This is the rule. You have to apply it. There is no, not to calculation of interest. No, don't tell it. This is the rule. You have to apply it. Okay. See, I have stopped trying to understand the logic of the Ministry of Corporate Affairs. See, there's a limit to how much we can understand that illogical people. There's a limit. That is my job is to teach the law. In those days, 1956 Act, I can explain. There was a logic. It was drafted by intelligent people. They knew what they were doing. Okay, they knew English. So those people, the grammar was correct. I cannot explain. My job is to teach, which is why, in 2012, when I saw the new draft of the new law, I stopped teaching. I stopped teaching company law. I said, I'm getting out of this. Like that for 10 whole long years, I waited 10, more than that, 8 years, I was not teaching, except lectures once in a while. The two limited sections like 185, 186, 188, like that, not for the entire law. So, and that too for members and professionals, not for students. Then this pandemic came in 2020, I decided to start again online. And unfortunately, I'm teaching this type of nonsense type of sections to you. What to do? See, boss, don't ask me why. Know it, do it. That is the philosophy of the MCA. Don't ask us why. Do it. If you say roll 3 times and then go that side and do it, you do it. So that is the rule. Why? Hai. Kyo is a question that MCA will not answer. Kya? They will answer. What? But how? But why? Don't ask us. What we say, do. That is your job. Don't waste my time. Okay, I'm not joking. If you don't believe me, go and ask a company secretary. They are the favored child of the MCA. Even they are now crying that V3 has come on, version 3 has come, MCA software. Literally weeping. Even there, sometimes I ask the company secretary, why is it like this? They are telling, sir, we don't know, sir. This is what MCA says, sir. At least you are a chartered accountant. You are asking why. I am a company secretary. I should not even ask why. My job is to do and die. That's all. Like that, they are telling. No. Dinesh, 6 months criteria is not during war crisis. No. War crisis, that topic over. This is common for the entire section. Dinesh Kotari, no, don't do confusion like that. War crisis has nothing to do with 6 months. For the purposes of this rule, meaning not B, for this rule, meaning rule 15. Okay. One more thing, B is an exception provision. So for an exception provision, don't create this. Okay. No. If the way the slide is prepared is confusing you, I'm sorry. But refer to the material or barrack, you'll be very clear. And the words are also clear now for the purpose of this rule. Entire rule. This is applicable to all. Whereas national defense services, you cannot reduce that 1% rate. That's what. For them also, this rule will apply. For them, for everybody, this rule will apply. Okay. Now, there should be a disclosure in the financial statements about the money received from directors. In case of private company, it should make a disclosure about money received from directors or relatives of directors. The reason is so that MCA will know the directors are given. So they might ask, did this director give from his own money or was it borrowed like that? Okay. In case you are a company that was existing at the time of these rules, then any amount, okay, was outstanding on that date, okay, that you have to give a separate return DPT3. See, what happened was the new law came. So there were many companies which had old deposits. Under the old law, they were not considered as deposits. Okay. Now the new law also, they are not considered as deposits, but they are saying if you have any receipt, outstanding receipt of money or loan, which is not considered as deposits from 1st April to 31st March 2019, then you have to file DPT3, giving clearly what is that, what is the reason. So they want to quarantine those amounts and clear them. So people should not try to push some some accept the deposits as non-deposits. So they were very clear. DPT3 clearly give certified by Company Secretary, you put it DPT3 where you say these are all not considered as deposits, reason. And that should come under one of the exemptions that we gave. Friends, from an exam perspective, I cannot overstress the importance. I assure you, definition of deposit is very, very important. Please, for this topic. We already seen, okay. As regards premature repayment of deposits, see, for acceptance from members, it's the same. We already saw this. Okay, already we have seen all this for members. Same applies for public also. Okay. In case you fail to repay deposits on the date of maturity after they are claimed, it shall pay penal rate of interest of 18% per annum for the overdue period. Penal interest of 18% per annum. Okay. 18% is a killing rate. Killing rate. It's a penal rate. Don't think 18% is a small rate. It's penal rate. Okay. I charge 18% on some of the loans I give. But when I give a loan, I charge 18. But that's indigenous. Without security, I'm giving 18% to known clients. And there I charge 18%. That's pretty high. Okay. They're paying 18% because their return on investment is more than that. So they're paying. Otherwise, commercially, if you're borrowing 18%, you're out. Okay. 18% per annum is very high rate of interest. Okay. It's a penal interest. So if you don't pay the deposits, you have to pay the penal interest of. Okay. See, whenever you are having secured deposits, you have to appoint trustees for depositors. Whenever you are creating a security, somebody has to take charge. Somebody has to sell that security. Just like debenture trustee, you have to appoint deposit trustees. And that trustee the charge will be created in favor of the trustee. So the asset will be controlled by the trustee. And the trustee's job is to ensure that the deposits are repaid and the interest is paid correctly. In case the company doesn't pay, they have the right to sell the asset and repay the deposits to the deposits. So that is called trustee. You got it, sir, Mr. Devraj? You got same role as debenture trustees. And for debentures, you have debenture trustee. Here you have deposit trust. Same role they play. The company, very important, the company has no right to alter any of the terms and conditions of the deposit or the deposit trust deed and deposit insurance contract. See, the deposit trust deed is the document by which the company enters into a contract with the trustees, wherein the trustees get the right to hold the security, to sell it, to monitor, to file for insolvency. All the rights are there for the deposit trust. That document is the deposit trust deed. Also, they cannot change the deposit insurance contract with the insurance company. Every year they have to pay the premium. In case you contravene any of the acceptance and deposits rules for which no provision is provided, then this rule says you will be punishable with fine extendable to 5,000 rupees. And in the continuing case, 500 for every day during which the contravention continues. In case there is no punishment, Rule 21 will apply. Okay. Where deposits are not repaid and it is proved that there was intent to defraud, then every officer of the company will be liable for action under section 447. You know 447, na? Tough. Other cases, punishment, company, 1 crore or twice the amount of deposits accepted. Contravention of 73 and 76, read with the rules, everything covered. If you violate any rule, straight away 1 crore or twice the amount. Minimum, maximum 10 crore. Officer, fine 25 lakhs to 2 crores. And for officer, imprisonment up to 7 years means 1 year, maximum 7 years. In 1 day, maximum 7 years. Okay, up to 7 years. So these are the salient provisions. Let me see. Okay. This is for 1/4/2014. Not important. Not important. It was accepted before 2014 and due and unpaid. Then you have to file. This is not important from exam point of view. Section 74, not important. Okay, not. I'm just giving it. Not important. Okay, waste of time. Don't waste. 2014, over. Now we are in 2023, entering 2024. 10 years over. All are over. Okay, because you should have repaid it within 3 years. Okay, maximum tribunal will extend. You can't keep on extending. Okay, that's the point. Somebody is asking some doubt relating to material. Suman Goyal, what is it? If you have any doubts, you can ask me. It's almost, you'll come to the end of this. You can ask me if you have any doubts. Page 5.29. That's why I'm keeping the institute material with me. Printout I'm keeping. Anybody asks a doubt, I can answer. Or if I'm wrong, I will correct myself. See, one more thing. Many of the provisions relating to deposit rules now are very, very procedural. I have not covered it in the slide. If I have not covered in the slide, it means it's not very important. Okay? So don't waste it. Page 5.29, points number 18, correct. Clearly states take period as earlier if less than 6 months and later year one more than 6 months. This item is only for deciding interest rate. No. It is for calculating the interest. See, in this respect, it has to be noted that the period for, see, when you are going for premature repayment, if the period is, it should be more than 6 months but before the due date, then the rate of interest will be 1% less. So the rate of interest part is over, sir. The rate of interest part is over. In this, the word in this respect is used by the person who wrote it. Because it says in this respect, don't link it with the earlier paragraph. That is different. This is a proviso to the section. In the original section, this comes as a proviso to the rule. Okay. The period for which the deposit has run, if it contains any part of a year, which is, then it shall be excluded. That period shall be excluded. Please understand. Then it shall be excluded. For calculating interest, it shall be excluded. So only it is not for deciding interest rate. It is for calculating the interest. Okay, calculating the interest. Otherwise, if that part is 6 months or more, it shall be taken as 1 year. So I'm not able to agree with you that it is only for interest rate. So please understand that in this respect is the culprit there, means you remove it. Because if you want, Sumanji, if you want to be an authority in any law, company law, income tax, do not read any material, anything. Go to the original fountainhead of knowledge, which is the rules and the sections. Okay. No. I'm happy that you are so nice to say that I correct my understanding. But so see, again, institute material is again second level source. The primary source is the BAR Act. When I prepared these slides now, I was not referring to the institute material. I was directly referring to the BAR Act and the rules. And then it was a massive exercise, Maha. I used to read the BAR Act, then simplify it, then prepare the slide, then read the material, then see whether I have given the correct, then satisfy myself. It took me a long time that during the pandemic, more than 1.5 years, I spent for preparing these slides. So sometimes they are wrong. I'm also a human being. But can company receive, not received, Ramja, can company receive? Don't put the D there, take the D. Can company receive? Can a company receive deposits other than money? Not monies, money. Money singular. Money. Or monies means don't put apostrophe S. Okay, monies. Then MONIES. Monies. Okay. No, only money. How? You will accept 3. There's an R.K. Narayan story. Yeah, a horse and 2 goats. Okay. There's an, I think, short story by R.K. Narayan. A horse and 2 goats. Or 2 horses and a goat. Yeah, horse and 2 goats. Correct. That. No, it should only be money and money only. Okay. Lokesh is asking, since I have a little time, let me explore. After completing CA, we can do IAS. Yes, you can. Yeah, definitely. Nothing wrong. But again, sir, CA itself is a pain. After that, you want to do IAS. You can do. There are a lot of people, lot of IRS people, lot of IRS officers in the income tax department are chartered accountants. Lot of IRS are chartered accountants. They are chartered accountants. Yeah, even IA and AS are there. There is the CNG, CNDG, the Controller and Auditor General, his office, you have officers, the Indian Accounting and Auditing Services, IA and AS. Chartered accountants do that. It's a competitive exam. But if you have decided to become IAS, why CA? You can do MA Philosophy, MA Economics and go. Why are you wasting your time doing CA? If your goal is IAS, then my suggestion, don't waste your time in CA. Seriously, I'm not joking. Seriously. You're wasting your time because it will take you 3 years to finish CA. After that, IAS. By then, better start now. Or else parallelly start preparing for IAS also. Write the prelims and all. IAS. If your goal is to become collector, if your goal is to become IAS, then CA may not. Why need CA? MA Economics, MA Philosophy, MA History, whatever. BSc Physics, MSc Physics. Enjoy it. Why waste time on CA? CA is a professional course. Why waste here? Don't give it. Because after finishing CA, you want. But if you still want to do IAS, nobody can prevent you. Can do it. Why not? Nobody can prevent you. Tell us a short story. No, sir. I have no short story. Okay. Since you are telling a short story, I will close with an anecdote from my own life. With this, I will close. Since Rahul Sharma is asking, can we use your PPT for preparation answering? Yeah, Surendran, you should use my PPT. Read the Institute Ka material. Read the Institute Ka material once. One revision, read Institute material fully. Okay? Then you take my material and concentrate, use it for second revision, memorizing. And try to memorize. Each slide should be in your brain. So in the exam hall, when you're sitting, from my slides memory, you can write. And you'll be able to. There are a lot of people who have told me that they used my slides for preparation and got 60% plus. So that I know. How many attempts you took? Sir, I'm an all India rank holder in both inter and final, both CA and ACS. 4 times rank holder. No attempts. I wrote both the groups together and cleared in one attempt with all India rank. So, sorry, if you're asking me the question, it's a low ball. I have to hit a sixer, I have to hit a sixer with that. I'm an all India rank holder. Right? Didn't I tell you? I'm an all India rank holder 4 times. Both CA inter final, ACS inter final. I never took attempts. Seriously. I know I may be sounding a little arrogant. Don't mistake me. It's not arrogance. I have not taken attempts. Okay. So, sorry about that. Okay. Having said that, I'll tell you one more thing. This is really going to, with this, we're going to close. CA final examination, advanced accountancy, there was a paper. In that paper, there is something called holding company, subsidiary company. In consolidation and all. My brain is limited brain and I can't understand anything much beyond. If you suddenly ask me 2 plus 2 also, I don't know. So accountancy was my toughest paper. I used to struggle with it, but I got 64. But after a lot of struggle, I got. Not aram se. A lot of struggle. So I was studying this holding company, subsidiary company. So a balance sheet, asset side total, liability side total, I could understand. Then minority interest, not bad. I was able to understand. Okay, proportionately you take pre-consolidation, pre-acquisition profit, post-acquisition. Something I was able to understand. Then they got chain holding. Hey, chain holding. A will be holding company of B, B will be holding company of C. So you have to first B and C consolidate, then minority interest. Sir, even that I struggled, sir. I somehow studied and I tried to understand, sir. Then suddenly the professor who was teaching said cross holding. And in law itself it's prohibited, but then you're saying A is the holding shares in B and subsidiary. B is also holding shares in A. I said, no, I'm not going to study this topic. And I sort of skipped it. Not joking, I skipped it. And I studied other topics very well. Other topics I was extremely good. But this one topic, vague only. In the exam, actually, I left it in choice. The point I'm trying to make is, the day I was exam, I'm kickstarting my motorbike and leaving for my exam hall, I'll start very early. Exam is at 10 o'clock, means I'll be there by 9. 1 hour early, sit in the table and meditate. For 10 to 15 minutes, meditate. Hanumanji, meditate. I'll see that, come with me, be with me, like that. Then 15 minutes, then I'll be ready and I'll not go anywhere. I'll sit and I'll, no preparation, last minute, nothing. No preparation, nothing. Sit there, pray to Hanumanji and say, Hanumanji, I'm ready. Be with me. That's all. Now the point is that also I'm starting my motorbike. At that time, my father is sitting in the portico, drinking coffee. Ask me, so you're going for the exam? Yes, sir. You're going for the final exam? Yes, sir. First day? Yes, sir. Advanced accountancy? Yes, sir. Have you studied? Well, yes, sir. Have you studied everything? Said, yes, sir. But now, a little bit. Then he asked me, $1 million question. Have you studied holding company, subsidiary company? I said, no, Papa, I have not studied. Very good, go. Because even he did not study. When he was writing the CA exam, he did not study. 2 generations have not studied holding company, subsidiary company. Okay. I know the story may sound a little bad for some of you who believe that if you read the entire Board of Studies material, top to bottom, you will never have, you cannot fail now. This logic, if you're having now, my suggestion to you, have a second thought on that. You don't have to study everything. Some topics are important, some topics are not important. You have to study the relative importance and study the important chunks like that. That way you will be having a lot of time to study all the topics. Okay, this is my suggestion. I'm not trying to waste your time, I hope. And since Rahul Sharma wanted a short story, this is a real story in my life. Okay, and I got 64 in that paper. I'm not joking. 60, but the choice was there. So other questions I wrote well. This question I skipped in choice. So that is how it happened. I'm not saying that is right. I'm saying I did it. So how you can find important? Simple, sir. You take the size transfer or you take scanner. Institute itself had practice manual. I don't know if they do it now. Earlier, Institute itself used to publish practice manual. So see the questions that have been asked topic wise. Already that Arun Sachdev has done it for you. Scanner is there. Do it. So it's all available. When I was preparing in 1987, I prepared my own scanner. There was no scanner. I prepared it. I took 20 sessions, past question papers, topic wise, subject wise. I spent posting in the ledger, which topic. It's the work. It's worth doing that work, boss. By the time you finish that, you will be very thorough with the topics and which is important, which is not. Then you start your preparation. See the power. These are all methods I have used, boss. It may work for you, it may not work for you. If it doesn't work, don't blame me. If it works, God is great. Okay? So with that, let me bid you good night. Wish you all the very best this month on Sunday, when we will take up a new topic called registration of charges. Registration of charges. Bye.